are starting to decrease. But the big thing to be mindful of is that the property market is made up of different percentiles. You've got the lower, the middle, and then the upper. Now, the middle to upper parts of the market, we're seeing that they are starting to come off. And you can see this through leading indicators like auction clearance rates. Auction clearance rates is when property markets, in different markets, we put properties up for auction. And the amount of properties that sell on a weekend, that'll give you an idea on how strong the market is. During the peak, properties were selling at about 90%. So if you were to sell your property, put it up for auction, there was a 90% chance that it would sell. Last week that just passed, it's now down at about 60 or less than 60%. So it's nearly a coin flip as to whether or not that property would sell. Now, going back to will the property market crash, I don't think it's going to crash. I think we're going to see a correction in certain parts of the market. Just to use an anecdote, there's in Sydney, we've got a property market, the inner west. You've got Newtown, Erskineville, Redfern, those parts. We've seen that the townhouse terraces, the housing part of the market is starting to come off a little bit by about 10%, but the apartment market is actually starting to increase. So it's interesting to see that now there's divergent markets, whereas before it was property markets running 15, 20, 30% largely across Australia. Now we're starting to see a big divergence in markets where different segments are performing better than others. And it just means that as an investor, you've got to be a lot more sophisticated with your decisions rather than just willy-nilly jumping into any market hoping for the best. Now, I suppose, why is this an interesting topic? Will the property market crash? It's for people that are looking for a discount. It's for people that maybe have their own home or have their own investments. So let's go through each of those. If you own your own home, the property market crashing shouldn't be a problem for you. You've bought this asset because it's a personal thing, it's emotional, you want to house your children, you want to house your family. So whether the property market comes off 10%, 15%, it's kind of irrelevant to you because it will correct at some point in time. For investors, it matters a little bit more because it means that if you haven't got equity in that investment, then you can't go then back out and buy more properties. But in actualities, again, if it has dropped by 10 or 15%, unless you sell that property, then you're not going to be impacted by that price decrease. You don't have to sell the asset, provided you can afford to service the debt. You can get your tax back from depreciation or tax back from your expenses. Then you can afford to hold that property through this downward trend. Then you're okay. Where the opportunity is during this part of the market is if you as an investor can pick up something for a bit of a bargain. Now, I've got to say, if you're looking at the affordable parts of the market, I wouldn't be expecting to find many bargains. So let's talk about that for just a second. Hello to all of you that have just joined, by the way. So if we're going to talk about property market crashing, people looking for discounts, you're not going to find discounts at the affordable part. And the affordable part for me is properties that are less than sort of $800,000. That part there, you're at around $800,000, you're beneath the median house price in sort of New South Wales, Canberra, and Victoria. Beneath sort of $600,000. So when you're beneath the median sale prices, that's the affordable part of the market. I don't think you're going to see a 10, 15, or 20% decrease in that affordable part. And the reason why is because, as I said earlier, when interest rates increase by 1%, there's about a 10% reduction in what you can afford. And that just means that people that were out in the market looking to buy properties, if they were buying a $900,000 property, now it's roughly $800K that they can afford. If it was $800,000, now it's about $700,000. So what it means is with interest rates starting to increase, we believe that people are going to be flying or moving towards affordable options. Then we've also got the Labor government that have stepped in and said, hey, we're going to buy part of your property. We'll help you get into the market. So that just adds another layer of certainty for the people that are trying to enter and that affordability part of the market. So if you're looking to invest, I think affordable options are going to keep on growing. So I'd be moving in sooner rather than later. However, if you're buying properties that are above $1.5 million, $2 or $3 million, I think that there's a lot of good opportunities there for you, because there are going to be a lot less people that can afford that style of real estate or that price of real estate, and you're going to see some big discounting. So if you're looking to go buy something that's, around that $2 million mark, that's where you're going to see the opportunities. Anything beneath the median sale price, you're not going to see some big discounting. So I want to say thanks to all of you that have jumped onto this quick live session. If you've got any questions, lay them out so I can answer them now. Other than that, keep your eyes peeled. I'll be doing one of these once a week. And I appreciate all of you joining, saying hey, and doing things. So happy Friday. Have a good weekend.